Welcome to today's market report.
European stock inched higher on Friday in cautious trading ahead of US jobs data, with economic recovery hopes putting the main index on course for its third straight week of gains. The Pan-European Stock 600 index was up 0.1%, trading just below its record high hit earlier this week. It was on track to record a 0.5% weekly rise, boosted by automakers and commodity stocks. All eyes are on the US May payrolls data later in the day, with a strong reading expected to reinforce expectations of the Federal Reserve would pare back its massive stimulus program quicker than expected. A survey on Thursday showed Eurozone business activity surged in May as the easing of some coronavirus-related restrictions injected life into bloc's dominant services industry. The data comes ahead of the Fed and European Central Bank's policy meeting next week, where investors will watch for hints on tapering of their large bond purchase programs. It is too soon for the ECB to begin even hinting at any form of monetary tightening, even with economic growth improving, according to BCA research. While headline inflation pushed above the central bank's 2% target in May, core inflation only rose to 0.9%. Shares in British Airways owner IAG, Wizz Air and EasyJet slipped between 1 to 2% after Britain added 7 countries, including Egypt and Sri Lanka, to its red list of destinations that require hotel quarantine on return to England. Ryanair slipped 1.2%, even as its chief executive officer forecast unrestricted movement between Europe and Britain from July and onwards. French media giant Vivendi, which owns Universal Music Group, slipped 0.1% after early gains on news that billionaire William Ackerman's Pershing Square Tontine was in talks to buy 10% of the music label for around $4 billion. Crude oil was up 0.87% at $69.42 per barrel. Brent was up 0.6% at $71.74 per barrel. Gold futures was up 1.06% at $1,893.15 per ounce. On the FX front, the appreciative tone of the US dollar keeps GBP USD on the edge. The pair extends the previous day's losses and trades on a lower note on Friday. The cable pair traded at 141.10, down 0.01% for the day. The ADP report showed the US companies hired 978k workers against the market expectations of 650k. The initial jobless claims fell below 400k, below the market consensus. The ISM Services PMI jumped to 64 in May, breaking a fresh record high and beating the market expectations at 63. On the other hand, the sterling is being pressured as to whether the country will enter into the final phase of complete reopening on 21st of June. The concern of the Delta COVID-19 variant, first detected in India, might delay the UK plan of ease of all COVID-19 restrictions, and it will miss the deadline. The UOB expected GBP to trade within the 141.35 to 142 range yesterday, and then the currency subsequently tested the top of the expected range, 142, before staging a surprisingly sharp and rapid drop to 140.85. The rapid drop appears to be running ahead of itself, and while GBP could dip below 140.85, the next support is at 140.50, which is likely to come under threat. Eurodollar has tumbled down in response to a trio of upbeat US figures and taper speculation. Breaching the 121.50 support left the Eurodollar pair heavy and tilted towards the 121 level. If Fed expectations continue to build post non-farm payroll, there might be a scope to explore US dollar longs against the euro in the view of the OCBC Bank. Expect near-term consolidation ahead of the non-farm payrolls report, but further downside may materialize if the ECB remains dovish next week. The relative strength index for the pair is nearing the 30 mark, and falling below that level would put the pair in oversold territory. Some support awaits at the daily low of 121.05, followed by 120.55, a cushion from mid-May. Some resistance is at the daily high of 121.30, followed by 131.60, 121.75, and 122. The dollar index, meanwhile, rose to a 3-week high of 90.596.
This is today's market news. Thanks for listening. We'll see you next time.